Then in part B, first, using activity-based costing, calculate the budgeted fixed manufacturing overhead cost per unit for milk chocolate and dark chocolate. Then, still using activity-based costing, you need to prepare the budgeted statement of comprehensive income, also again for milk chocolate and dark chocolate, for the year ended 31 October 2020. And for the purposes of this calculation, you should ignore the possibility of RCL establishing their own retail division, and you can also assume that the fixed admin costs are shared equally between the 4 products. Alright, so let's start by first calculating the budgeted fixed manufacturing overhead cost per unit using activity-based costing. Now, you'll remember from our lecture on activity-based costing, I've told you to break this calculation down into 2 steps. So let's look at step 1 first. First, in step 1, you need to calculate the activity rate. So let's go back to the information provided in the scenario. Alright, so over here we were given all of the information relating to the use of activity-based costing, and you can see the total budgeted fixed manufacturing overhead has been broken down into 4 different activity areas. Now, if you guys look at the suggested solution that I've provided you with, I've included the table which I normally recommend. So the first column in the table is the activity. So we have 4 different activities: roasting and winnowing, grinding, blending, and molding and packaging. So those are the 4 activities. Then in the next column, you always include the annual cost. So obviously the annual cost is going to come from there. Then in the next column, you include your cost driver. So the cost driver is going to be the measure that you've been provided with over here. Then finally, after you've identified an appropriate cost driver, you then need to determine the annual cost driver volume. And that's what you've been given in the next column over here. Here's your annual or your yearly activity of all products. So this is the annual cost driver volume. All right, and then finally, once you have all of that information, in the last column, you calculate the activity rate. Now, to save a bit of time, guys, because this is a very simple calculation, you've been provided with all of the information. You've been given the activity, you've been given the cost driver, you've been given the annual cost driver volume, and you have also been given the budgeted annual cost. You've been given all of that information. You don't need to determine appropriate cost drivers. You don't need to calculate annual cost driver volumes, which you normally need to do in other questions. So in order to save a bit of time, I'm going to go directly into calculating the activity rate by taking the budgeted annual cost and dividing by the annual cost driver volume. All right. Now, obviously, if you perform the calculation in the same way as the suggested solution, you won't lose any marks. It's 100% correct. It's just this is only going to be worth 4 marks, and that's a lot of work of writing up things that you've already been given in the question, where you won't be awarded any marks because you don't have to use your judgment to determine cost drivers. You don't have to calculate cost driver volumes. So you're wasting a lot of time by writing down things where no marks will be awarded. So to save a bit of time, and in a situation like this, what I recommend you do is you jump right into calculating the activity rate. So first, the activity that we need to look at is roasting and winnowing. So in order to calculate the activity rate, we take the annual cost and we divide by the annual cost driver volume, which is 320 batches, and this is going to give us a rate per batch. Then the next activity is grinding. So once again, take the annual cost, divide by the annual cost driver volume, and that will give you your activity rate per kilogram. Then we have blending. Okay, so don't worry, this question is not too easy, and if you have done the question properly under exam conditions, you'll know this question is not too easy. Although calculating the activity rate might be easy, the difficulty is going to come in step 2. So normally in most questions, you'll normally have step 1 being a little bit more difficult and step 2 is a lot easier. So this is now the other way around. Step 1 is quite straightforward and a very simple, easy calculation because you've been given all of the information, but step 2 gets a little bit more tricky in this question. So don't worry, this is definitely not too easy. Which you know, because you've done the question. Okay, so this is 320 per blending hour. And then lastly, we have molding and packaging. So that deals with step 1. We've calculated the activity rate. Now we need to move on to step 2. And in step 2, we allocate the cost. Okay, to the different products. All right, and if you go back to the required, we do not need to allocate this cost to all 4 products. We are only required to calculate the budgeted fixed manufacturing overhead cost per unit for milk chocolate and dark chocolate. So we are only looking at this calculation for those 2 chocolates. All right, so now we need to allocate the cost to these 2 different products. So let's start with roasting and winnowing. In step 1, we calculated that the activity rate is 3,900 Rand per batch. So in order to allocate this cost, we need to multiply the activity rate by the number of batches. So if you go back to the information provided in the scenario, we are just looking at roasting and winnowing for now. So we know that the total number of batches that they expect for the next financial year, so for the financial year ended 31 October 2020, they expect that there will be 320 batches in total. But please note this relates to all of their products, so all 4 chocolates produced. We are trying to calculate the number of batches specifically for milk chocolate and dark chocolate. So once again, let's just go and read through the information provided in note 1. We know that the cocoa beans are imported from a plantation in Ghana at a cost of 37.50 Rand per kilogram. The beans are then roasted to develop the color and flavor. And then after that, they go through a process called winnowing, where the outer shell is removed and the inner cocoa bean meat is broken into smaller pieces called nibs. And during this winnowing process, the cocoa beans lose 10% of their weight. We are also told that the roasting and winnowing takes place in batches of 400 kilograms each. Now just be careful, guys. This is not the number of batches. You've been given the batch size. each batch includes 400 kilograms. So you have the batch size. We don't want the batch size. We've calculated the activity rate per batch. If we want the cost in total, we need to multiply that by the number of batches. So how are we going to calculate the number of batches? We know that each batch includes 400 kilograms. So if we want to calculate the number of batches, we need to know how many kilograms of cocoa beans they are going to input into the production process. Once we know the number of kilograms they are going to input into the production process, we can then divide by the batch size, which is 400 kilograms, and that will then give us the number of batches. So essentially that's what we're trying to calculate. So we already know the batch size, that's the 400 kilograms. We now need to determine the number of kilograms of cocoa beans that they are going to input into the production process. Now, we know that the cocoa beans cost 37.50 Rand per kilogram. So if you go back to the previous page, we performed a very similar calculation with direct labor, where we took the unit cost and we divided by the number of hours per unit in order to calculate the budgeted labor rate per hour. We are going to apply exactly the same logic. We know that the cocoa beans cost 37.50 Rand per kilogram. So if we take the unit cost and we divide by the cost per kilogram, that will give us the number of kilograms per unit. So just be careful, that won't give us the number of kilograms in total. We need the total number of kilograms that they are going to input into the production process. That is going to give us the kilograms per unit. So we just need to multiply that by the number of units that they expect to produce, and we will then have the total number of kilograms of cocoa beans that they should input into the production process so that they can produce these units over here. So let's have a look at this calculation. All right, so for milk chocolate, the cost of cocoa beans per unit is 2.25 Rand, and the cost of cocoa beans per kilogram is 37.50 Rand. So that means they need to input 0.06 kilograms of cocoa beans into production in order to produce 1 unit of output. So that's what they need to input into the production process. Okay, to make 1 unit of output. So just be careful, that is per unit. So if we want to calculate the total number of kilograms that they need to input into production, we need to multiply this by the number of units that they are going to produce. So for milk chocolate, the expected production is 800,000 units. So they are going to have to input 48,000 kilograms into the production process. Let's perform the same calculation for dark chocolate. For dark chocolate, the unit cost is 3 Rand, and the cost per kilogram is 37.50 Rand. So to make 1 unit of output, they need to input 0.08 kilograms of cocoa beans. And they expect to produce 300,000 units for the year ended 31 October 2020. So that means they need to input 24,000 kilograms of cocoa beans into the production process. All right. So let's calculate the number of batches. Okay, so let's go back to the information provided in the scenario. In order to calculate the number of batches, we said we are going to take the number of kilograms input, which we just calculated now, and we are going to divide by the batch size, which is 400 kilograms. So for milk chocolate, they are going to input 48,000 kilograms of cocoa beans into the production process, and there are 400 kilograms in each batch. So that means there will be 120 batches. For dark chocolate, they are going to input 24,000 kilograms of cocoa beans into the production process. So if there are 400 kilograms in each batch, that is going to give us 60 batches. Right. Please note, guys, when you are performing this calculation over here, this is based on the number of kilograms of cocoa beans that are input into the production process. So before the normal loss, because if you go back to the information provided, during the winnowing process, the normal loss happens. So after this process over here, there will be a 10% loss, and for all of the other processes, obviously, we won't have the same number of kilograms because 10% of the kilograms will be lost. So we'll only be dealing with 90% of the kilograms for the remaining processes. However, they need to input 100% of the cocoa beans into the production process. They then go through the process of roasting and winnowing, 100% of the cocoa beans. During this process, 10% will be lost, leaving us with 90%. So you'll see how the normal loss affects the rest of the calculations. However, when we are dealing with roasting and winnowing, we need to look at the number of kilograms that are input into production. So we are still looking at 100% or everything that is input into production before the normal loss. So now that we've calculated the number of batches, we can then allocate the cost. All right, then we need to look at grinding. So we calculated the activity rate to be R7.80 per kilogram. And the cost driver for grinding is kilograms of nibs processed. So in total, they expect to process 125,000 kilograms of nibs for all 4 products. We need to determine the kilograms of nibs processed for milk chocolate and dark chocolate. So let's go to note 2. The nibs are then ground into a thick, creamy paste known as chocolate liqueur. All right, so no information to help us with our calculation, just a little bit of information about the production process. But what's important to note over here, guys, is all of the cocoa beans, we calculated the number of kilograms of cocoa beans that will be input into the production process. And during the winnowing process, which happened above, 10% of the weight is lost. So it's important to note that only 90% of what they input into the production process is going to go through this grinding process over here. So if we want to calculate the kilograms of nibs processed, we just need to take the kilograms that were input into production minus the 10% loss, or multiply by 90%, and then we'll get the kilograms of nibs processed. All right, so for milk chocolate, they need to input 48,000 kilograms of cocoa beans into the production process. 10% will be lost, so only 90% will go through the grinding process. So 43,200 kilograms. For dark chocolate, they need to input 24,000 kilograms of cocoa beans into the production process. 10% will be lost during the winnowing process, leaving 21,600 kilograms, which will go through the grinding process. Okay, so we calculated the activity rate for grinding to be 7.80 Rand per kilogram. So we now just need to multiply by the kilograms of nibs processed for each product. In order to allocate this cost. Then for blending, we calculated an activity rate of 320 Rand per hour. So they expect to have 1,500 blending hours in total for all 4 products. We need to calculate the blending hours for milk chocolate and dark chocolate. So let's go to note 3. The chocolate liqueur is blended with other ingredients to add flavor. The blending time per 100 kilograms of nibs processed is 1 hour for milk chocolate and 1.5 hours for dark chocolate. So let's calculate the blending hours. All right. So once again, guys, please note this process happens after grinding. So once again, we are dealing with the number of kilograms that are going to go through the blending process, not the number of kilograms that are input into the production process. So this is after the 10% loss. All right, so it takes 1 hour to blend 100 kilograms for milk chocolate. So multiplied by 1 hour. Just be careful, it's not 1 hour per kilogram, it's 1 hour for 100 kilograms. So you just need to divide that by 100 kilograms, which gives us 432 hours. For dark chocolate, it takes 1.5 hours to blend 100 kilograms. So multiply by 1.5 hours. Be careful, it's not 1.5 hours per kilogram, it's 1.5 hours per 100 kilograms. Sorry, 100 kilograms. So you just need to divide by 100 over there, and that's going to give us 324 hours. So we can then allocate the blending cost. Then finally, for molding and packaging, we calculated the rate to be 56 cents per unit. So we just need to multiply by the number of units in order to allocate this cost. And please note, guys, it's based on the number of units produced. So For milk chocolate, it's 800,000 units, and for dark chocolate, it's 300,000 units. All right, so we've looked at allocating the cost for all 4 different activity areas. We can now calculate the total cost that will be allocated to milk chocolate and dark chocolate. Then just make sure that you actually answer the required. We need to calculate the budgeted fixed manufacturing overhead cost per unit for each of the products. So we just need to divide by the number of units that they expect to produce. So it's 800,000 units of milk chocolate and 300,000 units of dark chocolate in order to get the fixed overhead cost per unit.